you. I love what you're working on. And why don't we kick it off with what you mentioned pre-show, the funding journey to go from idea and PowerPoint to publicly traded through the SPAC is quite an unusual journey. Why did it need to go that way, or what was that journey like?
Yeah, I mean, it was. I think there's a big thing about credibility, and like trying to stand out from the crowd in the crypto space is it's tough. It's a competitive market, and it's got a lot of players in it. So one of the things we were hearing from our kind of target demographic, which is the mass affluent kind of crypto fringe player or crypto amateur, is they don't trust a lot of the companies that they're speaking to. So, or they don't know, they're not transparent. So the idea of becoming a listed company very quickly, where we're regulated by the Financial Conduct Authority in the UK as an exchange listed company on the London Stock Exchange, that was something we wanted to get to quite quickly, and the opportunity just popped up really, really quick, a lot faster than we ever thought it would. It's been a really good move so far, and a lot of the customers that we speak to say it's a bit of a differentiator. There's very few companies in our space doing it at the moment.
Where are you guys now? Where are you guys now? You're less than a year old, slightly over. Where are you in terms of how you measure progress, revenue or users or transaction volume or whatever matters?
Yes, I mean, this is one of the things with a public company is we can disclose sort of the growth of the business and things like that. But we've got to be careful about what we do, because obviously we've got to inform the market all at the right time. But in terms of how we've gone about growing, I mean, the business was founded in well, the business that started was sort of January of 2021, and we went public in October via this sort of takeover SPAC into a listed business. And in that time, we've built and launched a product, which was the first step was to build a stable infrastructure, and then launch a web, Android, and Apple Store product all in one go, which was quite a tech feat from the team, which they just like blew it out of the park completely. And now where we are, sort of fast forward, we launched on the 13th of December. Getting kind of our PR and marketing strategies really firing was the first process that happened sort of over Christmas and then into January, and then it really sort of started going aggressively in sort of February time. And since then we've onboarded thousands of customers in the space. We've got decent assets beginning to build up, and the momentum of the business is crazy. It's we're week on week we're seeing the kind of progress that you'd want to see in this at this sort of life stage of a life cycle of a startup business. And it's really exciting. So all the metrics are going in the right direction. And that's probably
Yeah,
worth
how
saying.
do you?
That's despite some fairly nasty crypto market conditions throughout the whole piece as well.
Yeah, no, I resonate with that very much. I started a crypto company in 20 late 2017, 2018, and then the market just crashed. So
Nice.
it makes you more robust and durable to make it through those times. Um, but why was it a need for capital? Was it just opportunistic to roll up into a SPAC? Was it like a personal relationship with people that you knew? Because it
So
is so atypical.
yeah, I mean, it started. I mean, probably worth sort of rewinding to sort of the start of the funding journey a little bit. So we it was kind of it was January of 2021, and we'd been building this business sort of in the background, and just managing or helping friends and family kind of generate yield on their cryptocurrency, and it was just getting out of control. It was like the ultimate lean startup. It was literally a weekly email saying, look, this is the yield we've generated this week. There's no front end or anything required, and people were like, look, you've got to push this. What can we give you more? And it was just getting silly. So we said, okay, we've actually got to do something about this, and build a business. So we kind of had that initial validation from friends and family, and then wider community after that. So we went out to raise basically about $1 million, and this process took us quite a long time. So we probably we were beginning to close out the round around about sort of late April, early May, and I'm not sure if you remember, but 2020, like crypto halved in value in May. So you mentioned that 2017 thing. So we had like $1 million lined up from kind of angel investors, and we were going to raise another million from institutions. But as institutions tend to do when market conditions change, they were answering our calls and calling us before May, and then come like the crash, we were calling them and they weren't even picking up our calls. So yeah, this is where you're really having to kind of juggle a few plates, because we had this amazing CTO that I'd worked with before. I was trying to convince him to quit his job, and he was just like, "Well, how much have you got in the bank? And I want to see the bank statement." And so I was like, I was having to balance him with, with all of this horrible market condition, and raising these, getting the money in early from seed sort of angel investors. And luckily, I managed to convince him to sort of leave on the back of that first sort of $1 million that we got in. But very quickly we saw the scale of the opportunity was huge. So we're probably going to need additional capital, and so we almost started fundraising almost immediately again.
Well, what's the model? So what you're offering yield, which is not an uncommon thing, DeFi or CFI, where people put their crypto into wallets that are managed by companies, and then those companies pay out yield, sometimes between 5 and 20%, depending on the currency and the market conditions. Many of those companies, as far as I understand, they are taking that yield and, well, in the simplest version, they would just be allowing people to borrow as well. So you can borrow, you can come in and you can put collateral down, and you could borrow up to the amount that you have in collateral with some calculation there, because there's some uncertainty as what the price of crypto would be worth.
Yeah.
Is there a unique take that you have on that, or what did you see when you started the company that was interesting enough for you to dive in and build another one?
Well, I think I've had this sort of general theme throughout most of my career, which has generally been in traditional finance, and it's very much around trying to just simplify complex processes and then deliver them to retail customers. And DeFi is one thing. So I obviously know crypto, know finance relatively well before we founded the business, and I could see that there was these amazing DeFi protocols out there with huge yields. If you recall back like 2018, 19, it was insane. And coming from a traditional finance background, you're looking at these thinking, there's what's wrong with this? This is just crazy. And clearly yields have dropped a bit since then, but at the time it was pretty good. But I sort of saw that and said, well, the idea that the average sort of mass affluent kind of crypto amateur is going to open a MetaMask wallet, fund it with gas, and then connect it to a DeFi protocol and start earning, sort of yield. I mean, that's like 99% of people. It's way beyond them. And, given the sort of experience I'd had previously in the traditional financial markets, like, I just knew that was never going to happen. So you need a more simple solution. So then you look at the kind of the big centralized exchanges and said, okay, well, what about these guys? Surely they're solving this problem and doing it well. And you sort of see, okay, well, yeah, deposit your Bitcoin at one of these big centralized exchanges and we'll pay you a yield. It's like, great, okay, what yield are you going to pay me? Well, do you want it in our coin? It's like, well, what the hell is your coin? Like, I've never heard of it. And if I'm an amateur, I don't know if it's a good thing to get it or not. And then, if there's a limit to, if you want to put any significant amount onto the platform, then, the yield drops again. So all of a sudden you've got this mass, even the sort of the traditional or the incumbents were overcomplicating it. They're trying to get you to hold their coin. They're trying to get you to, there's all these kind of tiered approaches. So I just said, well, let's just cut all that out and say one platform, make it really simple. You can put normal cash fiat onto it in multiple currencies. We exchange it into the top 3 kind of assets for free, because we're not looking to make money out of exchange. And then it's just one rate paid in whatever you've deposited, right? So you deposit Bitcoin, we'll pay you 7% yield in Bitcoin. Stablecoin is 12% in Stablecoin. There's no staking of illiquid kind of like utility tokens or anything like that. It's just really basic. So I think the DeFi market is amazing if you understand it, and if you've got the time and sort of the expertise and technical nous to go out and do it yourself. But we're really hyper focused on this kind of this target market of the mass affluent who just want someone to take care of it for them in a safe and simple way.
All right, so I'm with you 50% of the way. So I hear the front end side, if I want to earn yield, what's going on behind the scenes? I put in $5,000 with Bitcoin, very simple, that crew just pays out a percentage over time. What is the crew doing on the back end to accrue that yield?
So in terms of what's going on in the back end, we have a team of investment professionals who be managing retail and institutional money for customers for as long as DeFi has really been around for, and their job is to really scan the something like 10,000 different protocols out there, which pay yield in the world of DeFi. So, the vast majority of them you wouldn't touch in any way because they don't have a good audit track record. They don't have enough assets. You'd be too big a part of them. And really, what the team is doing is building a diversified portfolio of the best opportunities in DeFi, wrapping insurance products around them where they can, and trying to build a really nice sort of risk-adjusted portfolio. And I guess that's where we are. Our kind of size is actually quite a benefit for us because some of these bigger players who have some of them tens of billions of dollars cannot access these markets. They just don't. They're just too big for them. So with us, where we're smaller, we can pass on much higher yields to our customers than just sort of the straight kind of institutional lending model, which is what these competitors have to do.
Interesting. So do you think of it? I think of the hedge fund more traditionally as this concept where people put in money and they say, "Hey, Phil, you can do whatever you want. Just pay me back more than I gave you," and there's complete freedom there. Do you view it more aligned with that, where your team can research all these different protocols, they can deploy capital and however much increments to these protocols they want, and then it's kind of up to you guys to make as much on the back end as possible, and then your income as a company is the spread.
That's correct. But we do, the way we're not looking at it as an investment management business is we are the tech layer that sits between the DeFi protocol and the everyday customer. So we're saying, look, this is where your money is going. It's these sort of four protocols. That's what it is. And we're looking at some really interesting new stuff that we're doing, where a lot of the DeFi protocols that we're talking to, I've mentioned they've got these very complicated. They're complicated to the uninitiated sort of front ends. We've got to connect wallets. We're going to those same protocols and saying, look, we've got this group of retail customers. You've got this amazing protocol that you've developed. You've got a following, but our customer base are never going to by themselves go and access it. So what we'll do is we'll almost bring that in your product, the front end, into our app, and it's this concept of kind of C DeFi, where a customer, we sort of abstract all of the gas costs, all the wallet infrastructure out on the back end, and we just sit in front of that DeFi protocol. So the customer can say, for argument's sake, just say it's Curve, for example. Let's say I want to invest in this Curve pool. I've got US dollars, so one click we'll do the conversion and then deposit into a Curve protocol, and then manage all of the yield that's generated and make sure it's compounded back into the initial coin. So it's kind of that translating layer, and I think everything that we do in the future, that's kind of the mission that we're looking to really sort of achieve. Is we want to be that bridge between traditional finance and decentralized finance and cryptocurrency, and trying to make it simple and safe for anyone to be able to access these awesome innovations that we're seeing in the space.
Yeah, yeah. And where do you think the tip of the spear is on this yield? Like when you see tremendously high rates of return, say, rewind the clock a few years, you're sitting there outside of the crypto world and you're speculating as to why are people willing to pay this much to get access to these coins? Have you triangulated on a thesis, at least for most people, or is there many different reasons why realistically people are paying for this? Is it just speculation like gambling, where it's,
I mean,
people just say, "Hey, I believe."
when you dig into the yields, you realize that the majority, the actual true yield in sort of DeFi, it's kind of it's in line with peer-to-peer lending models. It's sort of 5 to 8%, which is that's what it is. And that's like the true yield, which is coming from, if you're putting money into like an LP, providing liquidity to a decentralized exchange. That's kind of the trade. When the markets are busy, that's kind of the trading fee revenue. Or if it's a straight kind of say protocol like Aave or someone like that, where it's people borrowing, that base is what that kind of base yield is 4 to 8% tends to be what the base yield is. So all of this excess return, and this is what actually makes it quite interesting from a risk reward profile. All of that excess return comes from the tokens that the platforms are incentivizing you with to use that exchange. So whereas you might earn a 15% yield, you've got, you say, 5% of that is coming from real kind of demand and borrowing, and 10% of it is coming from that protocol just giving you, a boost on their tokens. And that kind of life cycle of those tokens, that's measured max in years, right? So unless there is and that is really driven by kind of the overall speculative, I guess, drivers behind the crypto market. Because the moment these tokens begin to plummet, so do the yields, and then you are left with that sort of base yield. So I think you've got to really look at it and say that there is a big part of the yields and the outsized returns that we've seen are being driven by, really just VC money that are pumping the space and pumping the coins, and it's really marketing that's going. And I think what we're seeing now is a lot of these sort of 2020, 2021 DeFi projects are coming to the end of their token distribution, and they've had billions of dollars put on them. Now that outsized risk or return is gone, it's like, okay, well, what, the tide's gone out, who's wearing swimming trunks, sort of thing, right?
Mm-hmm.
So it's like,
Yeah.
is there really a use case under this that goes beyond that initial thing? So it's a bit of a turning point, I think, for DeFi in general.
Yeah, yeah. What's your opinion of that? Are we seeing people exposed, or are people
I think
largely
I think
showing up?
there's been so much copy and paste. There's a lot, it's going to be huge consolidation in this space, Matt, and there's not room for tens of thousands of protocols. It's just not how it's going to work.
Yeah.
But encouragingly, like what we're seeing now is is sort of like the DeFi 2.0 was probably no better, which is this like mass sort of crazy inflationary tokenomics that we saw in certain protocols. But what we're also seeing is what DeFi was originally invented for, which is improving or making more efficient real world financial use cases. So one of the areas I'm really excited about is kind of supply chain finance in kind of DeFi. And you're seeing a lot of protocols where all of this sort of glut of stable coins that we're seeing right now, because a lot of people have dived into stable coins as the markets come off. They're being used to finance really cool real world use cases like Amazon inventory. I mean, I'm not sure if that's something you've looked at, but if you sell products on Amazon, you have to front the cost of that product, ship it to the the Amazon factory, so they're fulfilled by Amazon type model. So it's really cash intensive, and these and so these sellers tend to borrow the money, and people fill this sort of supply chain financing gap. And the rates, the lending itself is is collateralized by the stock that's held with Amazon, so it's the risk is much lower. The rates are still sort of 6-7%. It's just new use cases and real world use cases. And the cool thing is, supply chain finance I think is around about a $7 trillion market. So it's already 3 times larger than the current crypto market, and we haven't even no one's really done that in any size yet. And that kind of Amazon approach is just one area, and you can make
Yeah.
it so much more efficient for all the participants in that kind of transactional journey through DeFi. So that kind of use case is going to get really exciting.
Yeah. Yeah, it does seem like ultimately you have to make, if there's going to be a profit margin to share, it has to be an improvement on what currently exists. And largely that improvement is cutting down on human beings or excess fees. So in the case of traditional finance, I look at all the banks and the enormous inefficiencies that they capture or they have. So the competition to develop something that's more efficient, you look at a bank versus a DeFi protocol, I mean, it's got to be in the order of like 10x more efficient in terms of manpower and just overall
It, it's just
everything that goes into it.
it's just crazy. I mean, I have obviously the bank. I speak to quite a lot of like bigger banks in the UK, and I had one of them recently. I was talking to, and they were very. I wasn't really sure why I was in the room because they're very very dismissive of crypto in general. This is a storied institution with hundreds of year history, and they started really
Right,
going
right.
down the kind of ESG route with me. Sort of saying crypto is really gas intensive, and it was starting to get a little bit maybe heated and wound up. Why am I sort of here? But so I had to sort of raise the point that look, I'm on the 30th floor of your building, which is like only 10% full, and you're having a go at me about like the about my carbon
Efficiency.
the carbon
Yeah.
footprint of crypto, right? Let's be honest here. You don't need this building, and it's empty pretty much because it's sort of no one's returned to work post
Yeah.
COVID. So
Yeah.
it's this yeah, I don't know, yeah, I mean, it's so true.
It makes
So much,
sense,
there's so
right?
much fat to be cut out of
These
the system.
folks, yeah, and anyone who's advocating that a strength of their company is the fact they've been around for 150 years. That's a prime example of who you don't need to
Yeah.
convince that crypto is going to be effective. What about? So I understand the 5 to 8% yield category on stablecoins. This is not just you guys; pretty much across the board. It seems like 10 to 12% range for DeFi protocols and centralized C5 protocols. Why is it so much higher for stablecoins? And is there another funding source for that that's boosting up that higher
I
yield?
think what we've seen as the markets come off with what we've like, since November time, and last sort of three or 4 months is everyone's come out of the real speculative assets that have been smashed to bits basically, and some of them, the big altcoins are down 70-75% or more, and they're all sitting now in stablecoin. So there's too many stablecoins in the system. It's massive risk off environment. But generally, the people who really want to borrow, they want to borrow assets that aren't wildly fluctuating in value. If I think that's because generally they're not staying in stable coins when they're being bought. They're being used by big institutions who borrow, tending to sort of use them for arbitrage opportunities. So there's quite a lot of like chopping and changing between currencies. So the reason everyone wants to borrow stablecoins is because the underlying is obviously pegged to the dollar. If they were borrowing Bitcoin,
Mm.
often some of the arbitrage opportunities aren't as good, but also you're managing your risk, and your kind of general exposure to the debt that you've borrowed is more complicated as the underlying asset is moving around all over the place. So we find a lot of stablecoins always have been more in demand, and the rates have always been higher. So I think that's why you're seeing such good yields on stablecoins in
Yeah.
the wider market.
So, Phil, you wrote a book, The Money Triangle, a couple years
Yeah,
ago. Why?
yeah.
What was the impetus for writing a book? Obviously, I've never written a book. I have friends who have, and I hear from them how much work goes into writing a book. I don't know if there's a way to hack that or shortcut it, but it seems like just putting a book up on Amazon is a ton of work, and it's not cheap either. Why did you write a book? What was the inspiration?
I was working for this fintech, which is comically called Wealth Wizards, which, despite the slightly comical name, was doing some amazing stuff in the sort of automating financial advice. Not like your standard kind of robo advisor that's just sort of spits out standardized portfolios, but taking really complex, almost like at retirement portfolio advice. Talking about annuitizing pension pots and taking into account tax and all these sorts of things. A really cool bit of kit. And we were selling it into workplaces around the UK and abroad, and it was there to sort of as an employee benefit. So I was on these endless road shows, all over the UK, and some crazy stories about on factory floors, and in the speaking to the Playboy bunnies in the Playboy casino in London, who were wanting to know what to do with the tips they had in cash, and these sorts of things. And
Yeah, right.
yeah, so
They need financial education.
exactly. So I mean, over kind of 4 years, I think I took about 10,000 people through this tool, which was an amazing kind of product learning curve, and really helped with the sort of the early ideation around AQRU. But the same stuff just kept popping up. This was just talking to
Like
people.
what?
So everyone's spending too much, spending too much, saving into cash into the wrong products. They're kind of the way they were looking at work, just like turning up, not really sort of caring very much, then trying to have like a half-assed attempt of doing a side hustle on the side, which then ultimately meant they were even less focused on their day job. These sorts of things. And I was traveling a lot into London. I was always having go. I was always looking at sort of how my own productivity and things like that. And I was spending 45 minutes on a train into London, and 45 minutes out again in the evening. So I just started writing down some, I started writing blog articles, and then that kind of turned into books, into sort of like longer chapters that then just turned into a book. So it was really a way of taking what I'd learned from those 10,000 people, trying to distill it into like really simple kind of lessons, trying to make it fun and entertaining by wrapping real world stories around each lesson, or and then just like trying to be productive with dead time on the train. And I think I wrote the whole book
Yeah.
on the train, to and from London.
So so give speed me something. What? So people are complaining they don't know where to invest their money.
Well,
What were some of the lessons that you saw? Like
I
what?
mean, it's what I in the book, and I should probably dig into some of them, but it's like I'm obsessed with with compounding, and like compounding principles
Mm,
are so good. Like that 1 hour a day you spend on social media, like how much that looks over a year. It's sort of like a month of your waking life, right? Is scrolling through social media. It's like, just imagine if you got given a month to do something constructive, what you could do with that. And it's like, and it's the same with your money. It's like, most people just don't even, and it sometimes gets a bit of a bad rep, but like that morning coffee of two and a half, so called $2.50, say, every day for 5 days a week for 20 years. If you invested that in, say, an index tracker, low cost index tracker at sort of 7%, that's like 10, 20, $30,000 building up just from your morning coffee. And it's like, just have your coffee at home, for God's sake. I know you probably, buy a coffee machine. It will still cost you less than, buy an expensive coffee machine. It will still cost you less than the $20,000, $30,000 it will cost, in the future. And just trying to just give these little kind of nudges to try and get people to think about it, and just change some of their behaviour. And I mean the triangle being what how to spend it, how to save it, and how to earn it was the final one, which was just around. Most people start a side hustle when they're kind of mid to low tier in their performance in their job. It's like, look, if you the easiest way to increase your earnings is just to be awesome at, or better at, the job you're currently doing, and get a promotion, versus trying to do something really, really hard, like learn how to sell a product on Amazon, for example. And it's that sort of thing which, most people don't think about, because there's so much stuff you need to start, do the next get be busy, and go and research this, do that, and start a side hustle, and start doing. Well, for most people, the best thing they could do is just focus on the day job, and be better at it. And
yeah,
yeah,
yeah. I wonder if that's a I wonder if that's like a subtle or maybe even not so subtle tactic by companies to convince you that what you have is not good. So you have to leave what you have and then join this other thing. The grass is greener.
yeah,
And the only way, if someone were to say, I mean, this would be the least compelling product marketing pitch ever. Hey Phil, you have a great shirt. You're probably very comfortable in that shirt. You probably don't even really need another shirt, but like if you ever do, we have a decent quality shirt over
yeah,
here. It's like it's not that
yeah,
motivating. They have to say your job probably sucks. You're probably feeling drained. So then you picture, you have 100 experiences throughout the day, and you picture the 10 of them that were really negative.
yeah,
And then that fills your consciousness, and you're thinking, this job really isn't for me. Maybe
yeah,
I'm not meant to be an accountant, a doctor, a lawyer, a whatever, painter. And then you say, oh, but this other job, this other profession that if I can only get to somehow more aligns with my life path. And I view that as it's like a, it's like a chasm, right? Maybe you really do want to move in that direction, and something inside of you is compelling you to be interested in that because there is a sensation, a feeling that you can have of just being in love with what you're currently doing.
Yeah.
So in that situation, you don't have that strong pull, that desire to go towards something else. So there's something there worth understanding the motivation that's drawing you in that direction. And I view it as like, yeah, same thing in relationships is my perspective, is that yeah, there's something to work on within yourself and within the partner or within your job. But the answer, as tempting as it is, and as simple as it is, and sometimes easier to just cut out the job, like quit tomorrow, get a divorce, that's not often. If you look at other people who have gone down that road, it doesn't lead to where you think it leads as often as it does.
It,
And that seems. I mean, do you observe that to be true with
yeah.
10,000 people you talk to?
I mean, it's so true. I mean, especially the divorce side of things. I know so many people who divorced, moved on, and like you know, so many of them regretted getting divorced and not working harder on it. And it's always true. There's one of the things I did pick up on the book and I really enjoyed in the research was I don't know if did you know about like the sort of the ex Googler who did the happiness equation stuff, which is he just broke down
Well, I mean, it
happiness
sounds
into
familiar.
yeah, it's like just well, happiness is basically an equation, which is your reality sort of minus your expectations, and if your expectations are kind of lower than your reality, then you're happy because you're doing well, and so it's almost like you can balance that equation. So you either lower your expectations, but it doesn't sound particularly motivating, and you're happier. And I think the example they use is the happiest being in the world is your dog, right? All it wants is a pat on the
Yeah,
head and a big bowl of food. Low
yeah.
expectations is the happiest thing in the world. That's literally it. But at the same time, you've got to sort of, so you can improve your reality, and that makes that's one way of improving your happiness, well above your expectations, and you sort of sit there. But things then tend to equalize. But it's like that equation I always think is quite interesting, and I'm sure when that's when you have these huge goals and they're constantly they're written all over your bedroom wall or whatever, and yeah, it's just you can just stress yourself out and make yourself there's got to be a bit you've got to be a little careful about having these lofty goals and I'm one of the things I've observed as well from quite a lot of people I've been in touch with who've made a lot of money is just how depressed they are afterwards, right? They kind of expected achieving their financial goals to be this kind of like amazing life affirming thing, and
Hmm.
what they actually enjoyed, the real life affirming thing was the fact they had this goal, and it was the journey towards that goal was what they actually enjoyed. So achieving it was like life destroying, um, which is really fascinating because I'm not saying I'm not commercially driven, but it's just shows how much you've got to sort of diversify the goals that you have, and just be aware that that's something that a lot of people suffer from, I think.
Yeah, it's amazing how cliche that is, yet so difficult to grasp until you've experienced it. I mean, it must be, it's almost like the hero's journey of the human life, where you can know that that's what's going on, but you're still incredibly vulnerable to that trap, which is like you're obsessing about the trophy. If I could only get the trophy. So
Yeah.
you forget about what the point of the trophy is along the path, like in competition. And yeah, one of the things you said reminded me of lowered expectations. There's a good Saturday Night Live SNL skit. It's called I think it's called Lowered Expectations, where it just shows people that are you know lowering their expectations, and it's kind of parallels the Stoic
Yeah.
approach, negative visualization.
Yeah.
If I visualize, okay, today there's going to be an earthquake, my house is going to crumble down, and everyone I know and love inside of it is going to die, and I'm going to be homeless and without anybody in my life, like can I still survive?
Yeah.
And that's extreme thing to picture. It's almost impossible to picture, but anything can happen. Like every time you get in a car, you might not walk out. And just setting your baseline to that as opposed to your baseline to the positive things, this is true. I was listening to a good Jordan Peterson snippet where he was talking about the tendency of human beings to default to look for the negative things. Evolutionarily, if we look for the negative things, we can improve the negative things, and we can improve our lives. And we can stay safer and flourish more so. But that doesn't optimizing for existence doesn't optimize for happiness.
Yeah.
And you can exist. It's almost like existing is a priority over happiness, of course, right? You'd rather be alive and miserable often for periods of time than dead. But we don't. If you don't baseline on the positive things, like if you have one in 10 things in a relationship that go bad, and you don't acknowledge the nine that went good, then it makes it feel like you're just focusing on the negative thing. So saying to somebody, "Hey, thank you so much for putting away the dishes," something positive, acknowledging the positive things, I feel like it has to be a huge lesson that you can take within yourself in relation to your job, right? Like, man, it's so great that I got to leave work early today,
Mm.
or that I have a great boss or a partner, or like how many really good things are there about every person's living situation? And if you don't look at that and acknowledge that, yeah, you're miserable. It's
Yeah.
like, but it's not, you don't have, it's not guaranteed to stay that way, I guess is my point.
Yeah, and it's so interesting because there's all these studies around. This is something. It's just like your baseline happiness always returns to like the mean, and by no means I mean, I can't imagine how tough it is, but you often hear this in really extreme cases, like people who lose a body part, or like can't walk, and again a big accident, that sort of thing, and the initial sort of plunge in sort of happiness, and it's their life's ruined, and then often, when they get interviewed, sort of 3, 5 years down the line, it's kind of like actually, the happiness level is returned to the baseline of what it was before. And yeah, I mean, we just before we started, you were saying you had a 2-year-old. I've got a 1 and a 3-year-old, as I said, and it's really easy to get like, I just want to sleep, or I just want to like
Mm.
chill out and not have to read you a book for like 6 books before you go to sleep, right? But then when you realize it, it's like you've only it's like 5 years that we're actually going to want to chat to you, and or like they're going to obviously, but it's longer than that. But there's going to be this massive period
Yeah.
where they are just their own people and want nothing to do with you, and like picking up your kid and sort of giving them a cuddle now, and it's one of the most amazing things that could ever happen to you, and it's like yeah, it's difficult to sort of you've got to keep reminding yourself. I keep finding myself reminding that, saying, look, this is probably going to be the most the happiest part of my life, and the most amazing part with my kids. So yeah, don't
Mm.
really as hard as it is, put the extra effort in to just sort of like acknowledge it and be in the moment, and and growing a startup with two really young kids is an experience, but it's at the same time I've largely worked from home, so I've spent like so much more time with my kids than I ever thought I would do, and it's especially at this
Mm.
early stage. I think of my own parents who were, my dad was working. He was he'd go travel for a month, and we wouldn't see him for a month, and he'd be out the door at 7 and back at 8, and we'd see him at the weekends. It's sort of like that. That's, I mean, to not have to do that because of the way that the world of work has changed, and even doing really savage hours in a startup, because I'm doing them from a home office, I can always nip out and see my kids. It's amazing, and I
Yeah.
think just that balance has been, yeah, it's a constant reminder, like appreciate what you've got right now as well as everything else.
Yeah. Yeah. I feel like there's the story we have internally about what we're doing, our relationship to people, and then there's the external cultural stories that get put on us. So I picture like one of these, and these stories are always changing too, right? The influence of the cultural story on women and what careers to pursue has changed a lot within the last 50 to 60 years,
Mm.
right? It was the mainstream cultural expectation was you stay home and watch kids,
Yeah.
maybe get a part-time job. Now it's pretty much on the other end of the spectrum, where it's go out and pursue the most challenging and high-paying jobs that men do, and strive to be equal, if not better, at it than them.
Yeah.
And I think we're getting to a point where there's an acknowledgement that that has diminished returns.
Mm.
That there's something to be said for the growth of the spectrum and the depth at which, like women, in this case, women pursue professional roles. But we also are, between men and women, programmed. We have different incentive structures. I was talking about this past weekend, which I thought was really interesting, which is that men innately feel, like the masculine men feels, to protect and provide. So bring things in and protect the barriers. And this is not just true of humans. This is true of like chimpanzees, mammals at large. And then the female has the kids and is more nurturing. That's a broad generalization, and of course, many people fall on either end of that spectrum. But the incentive structures for women later in life, like late 30s, 40s, 50s, is not the same as it is for men. Like men, largely, is what as I observe, they still compete heavily as they did in their 20s and 30s into their 40s and 50s up this hierarchy of largely business, right? Which we keep a rough scorecard with money, but it's more than that. It's like social status and influence and power and, soup of that kind of thing. Women, is not the same way. Like if you think about it, just in your life, like women who have gotten to the top of a corporate ladder, they're not they're not more attractive to men in the same way, to equal capacity, that men are to women. And I find the sophistication of this nuance is the it's like the growth of our collective. It's like if we don't acknowledge this, or at least try to figure out what's going on between the two genders and what we each want and how we can build a better society together, then it's like a blind assumption that we should equally pursue everything, and the goal is to have 50-50 split across all boundaries, all races and ages and genders. And it's like, I guess looping it back, it's like it takes these kind of conversations to figure out what the story should be. What should your kids pursue? uh,
Yeah, I mean, I've got
it's complicated.
I gotta say, I've got a son and a daughter, and they're it's gonna be watching them grow up, and it's gonna be phenomenal. My wife is hugely inspiring, and she's worked, she worked incredibly hard. She is like wildly more intelligent and better throughout her whole sort of schooling than I ever was, and worked for a top tier sort of accountancy firm, and you know was really climbing the corporate ladder, but did give that up to look after our kids, and she wanted to do that, and she's going to go back to work, but she's already got a lot of pressure from people who are kind of judging her because she wanted to
Mm-hmm.
spend her, she sees this as a really important time. It's not me pressuring her to do it. We would make allowances, and if we need to put the kids into nursery 5 days a week, we would. But this is what she wants to do. She wants to raise our kids, and I think everyone should just there should be no pressure on anyone to sort of how they one way or another. Society shouldn't judge anyone as to what they want to do, and there seems to be a bit of a shift towards really pushing. If you're not out there doing everything, I think it's this boss lady kind of thing, and it's just the same.
Yeah, yeah.
There's a load of toxic stuff for men as well in the same vein, but it's just anything where just people getting made to feel bad about the choices that they're legitimately making is just silly. But I agree. We've got to have a level playing field for everyone, give everyone the same opportunity, and I'm a massive believer in sort of in equality of opportunity, but not equality of outcome. Because there still needs to be a kind of
Yeah,
competitive
yeah.
playing field for everyone, because that's sort of what drives us. Drives a lot of people. But the opportunity has got to be the level playing field for everyone.
Yeah, yeah, I totally agree with that. I think the vast majority, if not all, of the people who think carefully about this arrive at that conclusion, which is you're never going to hit equality of opportunity, but we collectively as a society benefit from moving towards that direction
Yeah,
because we selfishly, you and me and everyone else, should want the most number of people that are alive on this planet to be able to contribute to the maximum capacity of their creative and productive energy they have. The more people throughout the world that are producing, that are creating, the more we get to benefit from buying and watching and consuming their things. So that's I think that part of it doesn't get highlighted enough.
Mm.
And so there's an underlying implicit skepticism of like equality of opportunity. Yeah, sounds nice unless you have a ton of money, which means why should I want other people to have it?
Yeah.
Because if I'm in my head, in the back of my mind, if I'm thinking it's a zero sum game, I'm like, yeah, equality of opportunity, and then meanwhile I don't do shit about it.
Yeah.
But I think that's the like you we all should selfishly want that to be the case.
Yeah.
And yeah, I just want to underscore that because I think that's the thing that really gets people to change is when they're like, no, they really believe it because they selfishly want it for themselves,
Yeah.
as opposed to just, oh, it's a nice thing to do and I have to sacrifice something in myself. It's like, yeah, no, that doesn't happen.
Exactly. No, so true. So true.
Um, did you observe other? It's so interesting to talk to you because you went out and talked to 10,000 people in their jobs. Were there other things that you observed that weren't intuitive, or you think other people didn't or don't see about the way that people work, their relationship to their job or money?
I mean, the biggest one as well is just the, you know, like badly under risked. It was the other thing. In the UK, we've got something like 200 billion sterling just sitting in cash accounts, earning like negative interest rates. And it just comes from a basic lack of not understanding how risk works and how long-term returns work. And if for most people they should be putting this stuff into, I always go back to index trackers because it's the easiest thing for people to invest in. It's the lowest cost, and generally it's you see it, in a bad bear market on average it will drop 32%, and once or twice a year on average it will drop 10%. But in the long run, those are just blips into what was a crazy ride. And I think Buffett sort of mentioned it with, you look at the 20th century, there was crazy inflation, interest rates going up and down. There was 2 world wars. There was, multiple other wars. But over that time period, the Dow went from 8 to 11,000, right? With all that stuff over that 100-year period. So, if you've got a long-term time frame, which a lot of the people I was talking to would, they should be investing money now. They're not going to touch for 30 years. They cannot afford for that to be in cash. And, a lot of them weren't earning huge amounts of money. So it's even more important that the little that they do put aside is working really strongly for them. And this is part of why I got into crypto as well, because it's sort of, I found somewhere where there are these consistent returns. They're outperforming what the equity markets were doing. And and that's what sort of initially drew me in. Was I don't really talk about crypto in the book at all as an investment asset class. I do mention it, but don't really, at that point, sort of bring people into it because I think for most people they should just stick to the simple equity side. We see crypto as being 5-10% of a diversified portfolio. It's a high risk asset. That's what it should be. But it's also been, the top performing asset class the last 10 years. So you need some sort of exposure to it. And 5-10% of the overall market portfolio, again, is orders of magnitude larger crypto market than it is now. So that's kind of one of our longer term bull cases as people move into the space. But that whole idea of under risked is just like that was a killer every time. And we've got something called premium bonds in the UK, which I'm not sure if you've sort of heard of it, but it's like this government saving product which pays like sub 1%, but you get put into this like raffle every month and someone wins like a few thousand.
No way.
Yeah. And that like gambling mechanism has given it insanely high engagement from like people, but it's still overall net it all off, it's like sub 1% return because it's got this sort of gambling, like everyone's like, oh, I might win on the premium bonds, my premium bonds and that sort of stuff, and be able to yeah.
I've never heard it. Wait, can we talk about this a little bit more? So it's
Yeah.
the UK does this,
Yeah,
or London
you
does
sort of
this?
get entered into this. Yeah, so it's like a government-backed savings product, but you sort of get entered into these sort of competitions where every month they pay out. A certain portion of people pay out, and they're quite vocal about it. And it taps into people's sort of inherent sort of gambling addictions that they've got, and sort of
That's so funny.
Yeah, and because there is this sort of promise of like a government backed sort of like bonus that might appear, and you'll probably win it. You know, you'll
Yeah.
probably win it at some point because everyone does it. But it'll it will only top you from like 0.5% over the course of a long period of time. It will top you up from like 0.5% per year to like 1% a year. You know, it's just like so. Yeah, people just and,
That's
yeah.
fascinating.
So talking to people in the workplace and they're saying, yeah, no, I'm a big investor. I've got a big pot of premium bonds. You know, I'm gonna win. Don't worry, I'm gonna win at some point and this sort of stuff. And it's like,
That's so
yeah,
funny. So it's like the government is. Would you agree that it's the government wanting to incentivize people to save, and so they offer this little
yeah,
gambling bonus that pops up every once in a while, but in reality, it's not a good investment
yeah.
vehicle. But it's better in their minds. It's better than spending it.
Yeah, it's been. I mean, they've done the government's done some really good stuff recently. Where they've done this thing called auto enrollment, where there's like a minimum sort of employer sponsored sort of pension contribution now. It only ends up being 8-9% of like your salary that you're putting away, and half fits you, half fits your employer. But that's probably been the best sort of government initiative, and it kind of works on a negative affirmation basis. So like you you get put into it, you have to opt out, and then you get put into it in the following year, and you have to opt out. And most people are so poorly engaged in their finances that they won't bother to opt out, so they get forced to save, which is like that's like the
Mm.
ultimate kind of savings hack for most people is just make it more difficult for them not to contribute than it is to contribute. Most people just hate anything to do with sort of their finances like that. So, I think yeah, it's a really interesting sort of
How,
hack.
how's we live in different countries. They're very similar in many ways, but different in others as well. What was the what was your experience personally, and then if you can comment on at large of financial education, say between in public schooling or say in your childhood? Are there classes at all? Are they poor in quality? Are they impressive? Like
I mean,
what's going on with
there
financial
there
education?
there was absolutely none. No, it's so
None, yeah.
strange. Like and when you do maths and it's got an S when you're in the UK maths.
Hmm.
It doesn't tie it back to money. It ties it back to trigonometry and all the really important stuff that you're going to use lots of.
Right, right,
Yeah,
right.
but so yeah, it's weird.
Same here.
It's weird. I mean, like the only you get it from your parents or no one really is the idea. And yeah, you pick up your parents' spending habits. And that's what's so weird nowadays as well. Like, my kids are gonna like never see money. I mean, we just in the UK, I pay for everything with my phone now. I don't carry a wallet anymore. I used to like carry a wallet and tap. Then I realized that my Apple Pay has it doesn't really have a limit. Whereas my sort of tapping my
Hmm.
card was, like $50 or something was the max I could do. But I could tap and pay, $200 with my phone. So, it's gonna be so weird that they're not going to see this concept of kind of physical money in any way that like we did growing up. It's really
Yeah, no,
strange.
no. They just think you just open up this magical device that you have right here, and
Yeah,
then go on the Amazon app, and then things just pop up in your life.
exactly.
Yeah, it is incredibly abstract without a physical representation of it.
Yeah.
No gold, obviously, but no paper tender
I
coins.
mean, that probably makes it even more dangerous, right? I mean, that when you're trying to like instill good spending behavior, and it's even less tangible. It's like this magic money that's sort of floating around in the ether. Um,
Yeah,
it's going to be difficult to change that. To have responsible behavior, but perhaps because it's more digitized, you can almost hack the behavior better by having automated sort of ways of spending your money and and setting limits that you can't it's difficult to violate and things like that. So yeah,
mm,
whereas you go out on a night out and you've got like some a stack of cash and you wake up in the morning, you've got no idea where it went. If you do all of that on your with spending limits sort of wrapped around your account and stops you from buying something silly at a bar that you shouldn't,
yeah.
then yeah, that sort of thing could be useful.
So what's next for you guys? So you're publicly traded already. You've already IPO'd, not IPO'd. You've SPAC'd. They call it SPAC'd.
Well, we
SPAC.
basically were acquired by a listed company, and then we took over the enlarged
Right.
entity, basically. So yeah, we've got a pretty packed sort of 2022. We've got this solid platform. We're onboarding a lot of customers already. It's now about, look, how do we take on the incumbents? We're paying higher yields, and I think we've got slicker tech. We've got really, really good sort of customer experience, which a lot of these platforms don't have. So, with that message, taking it out, I want to make a dent in the existing incumbents that are in the market, and really over the next couple of years, take billions of dollars worth of customer money. But at the same time, it's about, we've got this whole other audience as well, which are the emerging crypto audience, and bringing them in by showing them or educating them primarily, but then sort of getting them to drip feed sort of money into this and to test it out, to sort of feel more comfortable with digital assets. That's going to be a huge driver. So even if we don't sort of take that much off our competitors, I think we're going to open up a new asset class, and a lot of the early traction that we've seen has been this kind of fringe crypto mass affluent class, and that's going to be really exciting because we're also learning a lot more from them about what they want and what kind of products they want to see in the future. So that's going to inform a lot of the product development going forwards. So yeah, it's about scaling. 2022 is about scaling and making a dent in the universe, hopefully.
Nice, man. Well, congrats on the progress you've had so far, and I'll definitely be following your story and wish you the best of luck, Phil.
Appreciate it. Thanks so much, Mike.
Yeah, keep crushing, man. Peace.